Hey, good morning, everybody. Happy Wednesday. Welcome to the morning show here on Stock Market TV. Spencer Israel, JC Parets. We got Alfonso. I don't know about Steve today. Steve is in the midst of Tropical Storm Helene as we speak. He's got some high winds. He's got some no internet. So maybe he joins us, maybe he doesn't, but I'm more interested in Steve's general, well-being since, Key West, hurricanes, kind of a thing there. So if he joins us, great. If not, we'll give him a pass today. As far as today's show, new guest on the show. You guys know I love new guests. Actually, this person was at our event last week in Chicago. Matt Nygaard. He runs the Chicago chapter of the CMT Association. He's the CEO of the Tillman Foundation, and he is a market maker and a trader. And I hope Matt has a floor story or two to share with us because we always love those. And then we'll just talk markets, right? Some comments from OPEC I saw. We got some news to discuss. We got some all-time highs to talk about. We got some things going on. What up, chat? How we doing? Everyone good? Yes? All right. Get the show on the road here, shall we?
Spencer Israel, nice to be doing this every morning again. I feel like we were so out of touch with this whole live stream thing for a good week. Good week.
It's definitely a wrench in the routine. I'm a creature of habit. I think you're a creature of habit too. I like
definitely, man.
I like my routines, and last week was a wrench. It's okay.
Listen, when you have as many kids as I do, you got to be on that routine. Like the best advice when it comes to your time and you're gonna be like, JC, any advice? You know what the advice I'm gonna give you? All the parents tell you like you got to keep your kids like on a schedule.
Yeah.
Holy shit, is that true? Like, wow.
That's good advice.
Yeah, because I see other parents that it's just a shit show. Sometimes the kids go to bed at 9, sometimes at 7, and then nap sometimes, no nap sometimes, dinner at these kids are wild, right? Like we're like military here, right? 7 o'clock. Time to go to bed. So that's the piece of advice for everybody out there listening in stock market land.
Yeah, good tip.
I think so. I didn't quite, they tell you a lot of things, but that's one that I learned that is definitely true. Stay on a schedule. So yeah, creature of habit, most definitely, more so than I ever have been before. And speaking of habits, something that we like to do every morning is check the futures markets. Shall we?
Sure.
All right, ladies and gentlemen, we have the Dow futures this morning doing absolutely nothing. I've noticed that we've gotten quite a bit of that, kind of slow action in the mornings. Nothing wrong with that. Typical of bull markets, in my experience, kind of like, boring markets, dull markets, some call them. The way I learned it was that you don't want to short a dull market. Dow futures flat this morning after hitting new all-time highs again this week, 42,600. You've got S&P 500 futures flat as well, just under 5,800, inching closer to that 6,000 level. NASDAQ 100 futures also flat, holding above 20,150. Big moves from the NASDAQ getting back into that rotation. 30-year bond futures down again, 0.5%, 124 and change. Crude oil down 2%, back to 70. Copper flat on the day, 4.5. Very impressive there. Gold keeps hitting new all-time highs. Nobody cares. I do. Pushing 2,700, up another 0.25% this morning. Silver down 1%, but still above 32. Very impressive. With the volatility index back to 15. 15 for that volatility index. U.S. 10-year yields, 4.35, down slightly on the day. Natural gas, 260, up 2% on the day. Big moves out of natural gas. Shout out Steve Strazza, who's been all over that. Shout out to Jason Pers and Sam as well. Bitcoin over in Funny Money Land. Bitcoin 63,700, down almost 1% on the day. Ethereum 2,600, down 1%. Solana 150, down almost 2%. Binance down almost 2%, just under 600. Total crypto market cap, Spencer Israel keeps inching higher, 2.19 trillion. Bitcoin dominance 57.5%. So that's still hanging in there. Any thoughts, my good man? Any thoughts?
We haven't been talking about gold all that much. Perhaps we should be talking about it more.
Well, maybe not on the show. We haven't discussed it enough.
That's what I mean. Yeah.
But most definitely, the trade ideas that keep coming out of there keep working.
Sure.
Gold keeps inching higher. And the biggest thing and I'm glad you brought this up because this is something I was noticing yesterday. Nobody cares. Nobody cares. Have you ever seen an asset, like a real asset, making new all-time highs every day and nobody cares? Like, when was the last time you saw something like this?
Well, my prediction is they're going to start to soon care because this is a very big move in the last few weeks.
Well, my prediction was wrong. My prediction was that they were going to start to care as soon as they started making new all-time highs. That was my prediction, and that was wrong.
Yeah, but you said that like 6 months ago when
I was wrong. Dead ass wrong.
Well, yeah, but then it didn't really break out until like just recently. So there's the all-time high.
Still nobody cares.
There's the all-time high, and then there's the all-time high breakout, which oftentimes are two different things, right?
Nobody seems to care. It's really fascinating from a sentiment standpoint. Obviously, that how interested I am in sentiment in general. Here's the chart. This one comes from Portfolio Accelerator. This was, in my opinion, the best chart of day one from the Portfolio Accelerator. That's slide 2 there, Mr. Israel. I thought this was so good, dude. I thought it was so good. It was right on point. Right? How do we feel about that?
Yeah. Wait, can you explain to everyone what the Gold Bugs Index is?
Yep. So you got the gold line, which is gold, right? See what we did there? We got the silver line, which represents silver.
Smart.
Right?
Smart.
The silver line is not silver?
No, I said that's smart. Yeah.
Yeah. Smart. Yeah. Very clever, the fellas here at All Star Charts.
Oh, yeah.
Coloring the lines accordingly. See what happened there? And then the Gold Bugs Index, bugs stands for Basket of Unhedged Gold Stocks, which is a very fun fact if you're not familiar with what bugs is, and you're always wondering why they called gold bugs. This goes back to like some poem in the 1800s or something like that. I don't know if it was Edgar Allan Poe, which reminds me of one of those rap songs. I was Poe like Edgar Allan, right?
Wait, it's funny you mentioned that word specifically. I had a shower thought the other day. Does the word poem come from Edgar Allan Poe? Does anyone know?
No.
It doesn't?
No.
Just a weird coincidence? All right.
Is that what you think about in the showers?
Random stuff. Random things just pop into my head all the time. I don't know.
The word poem comes from the Greek word poema. Of course, the Greeks. Do the Greeks like invent everything? Like, I feel like the Greeks, the word, which means a thing made, and the word poet comes from the Greek word poietes, which comes from poetine, meaning to make. So as it turns out, it doesn't make any sense at all.
All right.
Shout out to the Greeks.
And Che E.G. in the chat. It's not Euler. It's another famous math guy, Fibonacci. My shirt. Right.
Well, what about Fibonacci?
It's on my shirt. Fibonacci.
Oh yeah, Fibonacci. Yeah. Shout out to Big L.
That's right. Okay. Anyway, so back to the bugs.
So you got gold making new all-time highs. Silver also making new decade highs, continuing to inch higher. Still nowhere near those 2010, 2011 highs for silver. So a lot of room to run just to get back to the former cycle. And also the Gold Bugs Index, so the mining companies themselves, it just goes to show you how terrible these companies are. I mean, these are literally some of the worst companies on the planet. And, when everything's going right, dollars falling apart, gold's making all-time highs, their stocks. So they're gold stocks. Ready? Gold stocks. Gold is at all-time highs. Stocks are at all-time highs. See what's going on there? Gold stocks. Stocks are all-time highs. Gold's all-time highs. And gold stocks suck. Like, terrible. That's the market telling us just how bad these companies are. When everything is going right, still, they can't make investors any money. And it's like, wow, these are good companies, JC. They're profitable companies, JC. They have a new CEO and they give me all this bullshit. A public company has one job and one job only, and that is to make money for their investors, period. Companies do not work for their employees. Companies do not work for their government. Those things are secondary, tertiary, arguably irrelevant. A company that's publicly traded has one job. One. That's it. Increase shareholder value. Period. If anybody thinks that they should be doing other things, then those people are very confused, or they're lying to you, or maybe they're communists, or who knows. In capitalist societies with publicly traded companies, one job. You have one job.
Sometimes those groups overlap, right? Sometimes the employees are the shareholders, right? And shareholders are the employees, right?
Yeah, maybe, but that doesn't matter, right? Like, you're right. You're absolutely right. But it doesn't matter at all, right? If the shareholders are employees or not, the company still works for them, right?
Yep.
Not vice versa. And these companies just are not very good at doing the one thing that they're designed to do. Right?
I'm sure there are a handful that are, right? But by and large, as a group,
no
right?
question. And Spencer, you're absolutely right. There are companies, and we talk about them here. We talk about it in our meetings. We have a meeting later today where I guarantee you we're going to be talking about some of these gold stocks. Yes, of course. Definitely there are some gold.
As a basket, we're talking yesterday about ETFs and how I prefer the basket approach. It's why I love ETFs. This is an area where that won't work for you, right? Because most of them are probably going to suck, and you'll get a couple of outliers that don't. Right.
Like wheat and precious metals, for example, is making them all-time highs. Like there's names out there that have been working, some better than others. As a group, just huge disappointments, huge disappointments for sure. But with that being said, we've been buying them because I think there's a catch-up trade here for sure. As gold and silver continue to make new highs, I think that rotation into those miners eventually comes along, and then ultimately. You're going to see that sentiment coming in. It's going to come in hot. They're going to be talking about it on the TV every day and everything like that. And I know that there's a lot of people, and this is a good topic. There's a lot of people out there that are very upset, like very angry, that they're not talking about the gold stocks on television. Like, it gets them very sad. My response to them is, who cares? First of all, it's 2024. Who's watching basic cable television anyway, right? So the fact that you're getting all worked up about what they're not talking about on television, like, are they the ones in the wrong, or maybe you're just crazy, right? So think about it like that. Who gives a shit what they're talking about on TV? That's how I see that. If you own precious metal stocks that are doing well, good for you. Like, what are you complaining about, right? Why do you want people on television to talk about it? Who cares, right? Don't worry about that. We'll know when sentiment is getting frothy. We've got the data, and we're just not there.
My favorite line about cable news, but it also applies to financial TV, is if it ever pisses you off, do what every other viewer does: board your plane and go to where you're going, right? Because we're all just watching in the airport.
I see what you did there, Spencer. I see what you did there, you clever little bastard.
Get on the airplane and go. Right?
That's so funny. It's true, man.
Yeah.
I'm there on the airport and they got CNN on, and I'm just like that's why you always wear headphones, right?
Right.
You got to put your headphones on. You don't want to hear that shit, man. You don't want to hear that.
Also, if you want to hear him talk about gold, just wait for the commercials, because that's all you'll get is gold. But anyway, so gold.
Can we talk about small caps, please?
Yeah, sure. Let's go.
I would love to talk about small caps. Slide 4, please, Spencer Israel. All right.
What's this?
So for the last, we're over 2 years into a bull market. We're 2 years and 3 months. We're 27 months. Is my math right for you math majors out there? 2 years and 3 months into a bull market. And the entire time they've been telling me how dumb I am, because this is just a bear market rally.
No, they haven't. Come on now. Maybe at the beginning some people were skeptical, and maybe
through last year, my friend,
at certain points in the middle, maybe in August, maybe in whatever it was in the springtime, right? Summer, whenever we have that lull, but no, certainly not the entire time. But okay, whatever.
You can maybe speak from your experience. I will speak from mine.
Oh, fine.
They've been telling me it's a bear market rally, JC. Bear market rally. You'll see, JC. All right. I've also been told that the reason that this is not a bull market is because small caps are not participating, which is hilarious, because there have been small caps who are the leaders off the lows. Small cap consumer discretionary, small cap industrials just have been monster leaders. So maybe their small caps weren't working, but there were plenty of small cap indexes and stocks that were working. Here we're looking at the small cap 600 index. These are companies that, by rule, need a track record of earnings in order to be included in the small cap 600 index, as opposed to the Russell 2000 that lets anybody in no matter how much money they lose. These are companies that are earning money, and look at this base. We are a nose hair away from new all-time highs in the small cap indexes. And you know what leads me to believe that ultimately this is going to break out is that slide 3 there, Spencer, the one right before. You know, the leaders have already been leading. This is a great shot of, you know, not only have there been small caps that have been working this whole time, there have been a lot of small caps that have been working way better than most of your precious large cap stocks. Look at small cap industrials up 70% so far this bull market. Small cap consumer discretionary up 55% this bull market, dramatically outpacing the Dow and S&P 500, even small cap materials, you know, all outpacing that Russell 2000, for example. Small cap technology, on the other hand, has been a struggle. You know, so while people are like, oh, it's only the tech stocks. Well, small cap tech actually hasn't been doing very well at all. It's the other small cap stocks that have been doing. So, you know, number one, the people telling you that small cap stocks haven't been working, in many cases, they're just lying to you. It's malicious, right? They're purposely trying to mislead you. That does happen. And in a lot of cases, which in my opinion is even worse, they never even bothered to look. They never even looked, right? That's worse. I'd rather be with a liar than someone who's just so lazy that they didn't even look. I like the liar better.
I'm the exact other way.
All right.
I'd rather be with someone who genuinely doesn't know than someone who knows and is lying to your face.
Oh, I think I'd rather have somebody lying to your face than somebody who's just so lazy. At least the one lying to your face has like a plan and is putting in the work. The one who's just so lazy that they didn't even bother to look, they're so dumb that they're just repeating what other people say. Like, that's the real loser.
Then you can educate. Then you can educate and you can teach, and that's a good moment.
Well, I don't really have time for that.
Right.
Go to the minor leaguers. These are the best small cap stocks. And by the way, we changed the rules a little bit. These are the minor leaguers. So we want to catch these names before they get called up to the bigs. That's why they're called the minor leaguers. My neighbor right now, Spencer, is in AA with the Twins.
Oh
yeah. Yeah, how about that?
Cool.
And in the spring, may or may not get called up for a few spring training games with the big leaguers. Pretty cool, right?
Maybe the big club could use him. They're scuffling right now. So
listen, a catcher that can hit the ball, man. Whew. So anyway, these small cap minor leaguers, we changed the rules a little bit. Traditionally, these small caps are between 300 million and 2 billion in market capitalization. We don't think that makes any sense. So we just changed the rules. For us, small cap stocks are between 1 billion and 4 billion. Because if you're under $1 billion, like, you're pretty useless. Like, you're not even at $1 billion in market cap. Like, you know, grow up. Right?
I do like what you said yesterday. I think it was during the live event, right? Is that the like rule of thumb, like the bands on the market cap, small cap, mid cap, large cap, those probably need to be adjusted a little bit just because of the inflation in market cap in the last decade, right? So like $10 billion, right? Isn't that what a large cap is? That's
just dumb.
That's not so big anymore, right? No. So maybe
$10 billion is definitely not a large cap.
It's time to move that up a little bit.
We moved it up to like 35.
Right.
So for me, that 4 to 30 billion.
I don't know who makes the rules about this stuff, but whoever does, maybe it's S&P Global or Dow Jones. I don't know, but if they could just update that, I think that'd be probably appreciated. Thanks.
Well, the good news is that around here we get to make our own rules.
That's true.
We don't have to ask anybody for permission to make money. Like, we could just go do it, you know, which is really cool, you know. So this is our minor leaguers. Anybody's allowed in, any sector, any industry group, any stock, American or otherwise, it doesn't matter. As long as it trades on U.S. exchanges, you're allowed in. You got to be $1 billion. You got to be under 4. And then we sort by relative strength. And you know what you're going to find, even in tough markets, even when stocks are under pressure, you know what you're going to find? You're going to find stocks on this list that are doing very well. And you want to know something else? Even in the best of times, in the best, strongest markets, you're going to find small caps that just don't get the memo. That just can't go up, even in the best markets. And that's really just the nature of the beast when it comes to small cap stocks, right? That is on an individual stock basis, you're going to find a much lower correlation with the overall averages than you would at a large cap stocks, right? Small cap stocks tend to dance to the beat of their own drum, march to the beat of their own drum. How do you say it? What's the saying there?
No, you got it.
Yeah. People are like, oh, don't use cliches, JC. But, a lot of these cliches help people understand, what it is that's going on. So, like, I'm not one of these anti-cliche people. Are you?
No, cliches are cliches for a reason because they are appropriate in a lot of
Were you a journalist major, Spencer?
Yeah, man. Let me tell you, if they caught you using a cliche, they would take you out back and whip you.
They would, right? So that's like a very they call it J school or whatever, right?
Oh, come on. Every school gets an abbreviation. Business school is B school. Journalism school is J school.
Yeah, I think B school is a dumb one too. J's even worse though.
All right, whatever you say.
So just think about the how in dire straits the journalism community must be if they are whipping their journalists when they are providing value to their audience by using a cliche that can help someone understand an important concept. Like, think about that. Like, these people that go to journalism school, like, they're taught from the beginning to make things more complicated for their audience. Like, think about that. So that's why, after 2008, 2009, after this social financial revolution, we no longer need journalists, right? We could just go to the source. If you want to know how the economy is doing, go to the economy expert. If you want to know what's going on in venture capital, go to the venture capitalist. Like, we don't have to play telephone with all these journalists. Like, oh, he said, she said, right? That's the beauty of what we're doing here, right? We can just go straight to the source now. We don't need these people anymore, which is fantastic, right? Which is great. So kudos to all of you for being here. You could be anywhere in the world, but you're here with us. It means a lot to us. So is Mr. Glick in the house?
No, Kenny texted me and he wanted to pass along a message that he can't come on today, but I'm going to be sending out live ideas in the room today as an experiment. So if you're not in Kenny's room, I don't know what you're doing. You should be in Kenny's room. Here's a QR code to get into Kenny's room, or just very simple, hit thebid.com. It is not hard to remember. Hit thebid.com, get into Kenny's room, free trial, and you'll see how he literally makes money in every kind of market. And so that's what you want. So there's the link. Get in there. And I've never met anyone quite like Kenny in terms of trading or personality.
You're probably not the only person to have said that.
He is a person unto himself. He is not a cliche. He's whatever the opposite of a cliche is. He goes to the beat of his own drum. There we go.
Now here's one that doesn't dance to the beat of its own drum, and that's slide 2 there, Spencer. That is one U.S. Industrials, and I got 2 charts for you. One is I wanted to show the equally weighted. I have this here somewhere. Where's the equally weighted? Come on, Jay. Because the market cap industrials historically are kind of equally weighted already. I don't know if you realize that. There isn't any stock in the industrials that represents more than 4% of the entire index. So this is pretty equally weighted as it is. The reason I wanted to bring this up is I'm not like the moving average guy. I'm not like, oh, well, if it falls below the 10-day, then it's got to go to the 20-day and then the 30-day and then 40-day. And there's so many moving averages that one of them is going to turn into support, right? Like, we all know that guy. Don't be that guy. For me, it's more going chart by chart and recognizing the fact that you've got a lot of stocks that have their 50-day moving average above their 200-day. And what's really, really interesting is that there's nothing magical about the 50-day moving average. The number 50, it could be the 51-day, it could be the 47-day, right? It doesn't matter that much. Same with the 200. It could be the 205-day, the 193-day moving average, right? All of those things, you're going to get the same data. So I just wanted to sort of reiterate that. 200 is, again, nothing perfect. And we know this. With everything that we do, we know it's not perfect. But a lot of this stuff is good enough. And the idea here is that you have a shorter term moving average and a longer term moving average. And when you have a rising short term moving average above a rising long term moving average, that is historically happening in healthy market environments. That is characteristic of bull markets. Those are the things you should expect to see in environments where investors are being rewarded for owning stocks. investors who don't own stocks or don't own enough stocks are being penalized for it, right? Those are the types of things, if you listen to the people telling you it was a bear market rally, or like, oh my God, small caps aren't participating, so run for, go to cash or whatever. I'm like choking to myself because it's so funny.
Yeah.
If you're one of those people, you're being penalized in this market. And that's what happens in healthy bull markets, right? That's what happens. And that's what's happening here. So take a look go sector by sector and look at where prices are relative to their 50-day moving average. Look at where prices are relative to their 200-day moving average. Look where the 50-day is, where it is relative to the 200-day. What you're going to find is they're all going from the lower left to the upper right. The short-term uptrends, they're long-term uptrends, and you're seeing that sector by sector. Financials, industrials, technology, communications just made new all-time highs. No love at all out there for communications. Half that index is Facebook and Google, right? Or Meta and Alphabet, if you want to be grammatically correct these days. I still can't get used to that. But that's half the communications index. It's just currently making new all-time highs. Actually, let me drop it in there.
Speaking of Meta, speaking of Meta, real fast, for those of you that are interested in such things, the Meta, what's it called? The Meta Connect conference is today at 1:00 Eastern. So they will almost assuredly be discussing AI and the metaverse, or AI in the metaverse today. And so there will be some headlines out of that, I'm sure. A lot of it probably just noise, but if you are into such things, then you might care about that.
And Spencer, why school me? Why would someone like myself, let's just say, be interested in something?
It could end up being a tradable event. You never really know. And we don't get. It's very rare to get like a market moving thing in the middle of the day, right? Because earnings are out in the morning or in the afternoon after the market closes. So, if they say anything interesting that the market, sort of catches wind of, and it could become a thing. Kind of like how Apple's events can become things, when they have their iPhone event or the Worldwide Developers Conference. Those are middle of the day conferences too. So it's it's unusual. And it's noteworthy to me when there's like a midday event that has the potential to move a stock, because we don't get it all that often. That's all. And I don't know what they're going to say. Maybe it's just nothing. Maybe it's all hot air, but maybe it isn't. Maybe they do come out with some like insane technology that we can't even imagine now, and the market loves it. So I don't know. Just kind of be mindful of that. That's my point.
Yeah, we were talking about the other day, you were on the call, we were talking about, what are the most important companies? Where's all the attention, remember? And we were like, Meta. Yeah. Meta was on that list. Spencer was not so convinced about Tesla. I'm like, Tesla. He's like, yeah.
Well, I don't know about Meta either.
Did you tweet it out?
I did, and did not get any responses. No, but our consensus was that Amazon and Apple and Nvidia are definitely, if you're going to get a list of the top 5 or top 10 most important companies, those 3 are definitely on there. After that, it's open for debate, right? Meta, Tesla, JP Morgan, maybe Berkshire. I don't know. It's not as cut and dry, but those first 3, we were unanimous in agreement on that. So I don't know.
So when you tweeted it out, you led the witness.
I have to go again. No, I didn't. I didn't
led the witness with the ticker symbols.
No, did I? I don't think
you led the witness. You led the witness, and you want to ask for the top 5, Spencer. You want to ask for the top 5.
Right.
And you led the witness. You can't lead the witness.
Everyone, just drop your opinions now in the chat. I'm curious what you think of the top 5.
What are the top 5 most important earnings coming up this earnings season?
Yeah. Yep.
Top 5 most important earnings releases. Chat, you want to weigh in? You want to weigh in on the Twitter?
TSM is not a terrible name. It's not, that's in the conversation. Sure.
That's absolutely in the conversation.
Yeah.
Shout out to Phil. Shout out, Phil.
It's not awful. Yeah.
So, do we have time for a little hot corner before Matt Nygaard, or should we do that afterwards?
Let's do it after Matt.
All right.
Well, let's bring on Matt Nygaard and talk about whatever we talk about.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Mr. Nygaard, good to see you, my friend.
Good morning. How's everyone?
Oh, good to be back in the saddle. Still recovering from a week on the road.
Yeah, Chicago can take it out of you.
That Kingston Mines will get you. Those Jamesons go down real quick.
Yeah, series will get you.
Series will get you too. Yeah, that's right. Series will get you too. So Matt Nygaard, we had it would be foolish to not start here. Spencer, if you want to get the Pat Tillman link ready.
Yeah.
We throw up slide 2 here. So Matt Nygaard was nice enough to invite the whole crew, really, to come to the Pat Tillman Foundation last week, which happens to be in Chicago, and it was really cool. And I am very, very, very impressed with what you guys are doing. Matt, I know that we're going to talk about the markets. We're going to dive into some of the things that we discussed last week at our Portfolio Accelerator. But can you briefly school the folks on all the amazing things that you guys are doing?
Yeah, thanks. And thanks for the whole crew coming over. I think we had like 35 people there and got to hear a little bit more about what we're doing. So the Pat Tillman Foundation's been around for 20 years now. Pat was tragically killed in 2004 after giving up his NFL career to enlist in the Army Rangers after 9/11. He enlisted with his brother and Kevin, and tragically killed there, and is really an American hero. And the foundation celebrates his life, how he lived his life, his humble service, his scholarship, his the way he carried himself in his life. And so we have Tillman scholars, and these are military veteran, current enlisted, and military spouses that we provide scholarship and leadership training for. We have 60 scholars a year roughly, and we're up to 931 amazing Tillman scholars that are around the country doing amazing things in communities. And so it's been a real pleasure to work with the foundation. We're very mission focused. You come in every day and you know exactly what you're doing. You're trying to promote our greatest asset, which is our Tillman scholars. And really appreciate the opportunity to talk more about it. And thanks for your sharing it on your platform. I really appreciate it.
Happy to do it. Matt, that video that you showed us while we were there, is that available to the public somewhere?
Yeah, I can send it to you and you can put it out. That was actually part of it. Was you'll recognize the voice was Kevin Costner, and that was an ad that was done during the Super Bowl, and so it was really well received, and so we used some of that with our promotion. We're actually doing some videos now. Our marketing director is working with people that have we're at the 20 years, so we're getting some stories from people that knew Pat from when he was with them, and so you're gonna see those roll out, and some just amazing people that knew Pat personally and sharing the behind the scenes. So
love it. Matt, please share that link, and Spencer, when you send out the slides for today's show, please include that link, because I'm one of these people.
Gotcha.
Probably why I'm a technician. I'm one of these people you could tell something to, but until you show me, like, I'm not really gonna get it. And that video that you showed me, it was like 3 minutes, 4 minutes, whatever it was. Like, I was like, holy shit! Like, these people were doing like really awesome things. Like this, it was really, really cool. So I think there are other people out there that are like me in that way, where when they see the video, they'll be like, oh shit! Like, wow, okay, cool.
Yeah, and the thing too is that we're the generation that knew Pat when he played, and we know his story, and so reaching the next generation of people is very important, Gen Z. And I think if people knew more about how Pat led his life, I think the current younger generation would really embrace him, because he was a scholar. I mean, he was a thinker. He carried books around with him all the time. He engaged in conversation with people and got to know people from all backgrounds, and so into experiences.
Did we lose Matt?
Don't know.
Oh, I think we may have lost Matt. That's a bummer.
Wait a minute. Yeah. Okay. Well,
needless to say, folks, really, really cool. What they're doing is they're using that scholarship money to bring the the best and the brightest, you know, military servants that are coming into the private sector, and these are in education, these are entrepreneurs, these are scientists that are doing amazing things. And they,
Wait a minute. At
Sorry, I don't know what happened. Thank you. Sorry about that.
no, all good. Just telling the folks some of the amazing things. Are we good? Are we good, Matt?
Yeah, I can hear you. Yeah, I'm okay now.
Okay, great. So just down the road, the following 2 days after, you know, a little bit of fun and some celebrations on Wednesday, we spent a couple of days together over at the Hyatt. Is that what's that noise? Are we good?
Yeah.
Matt, I think that's you, but we're good.
Okay. So you spent 2 days with us. This was the first time that you joined us for a 2-day event like this. It happened to have been right in your backyard. So I'm like, Matt, you got to come.
Yeah.
What'd you think? What were some of your thoughts?
Yeah. So I had several takeaways from it. One of them, I really enjoyed some of the conversations when we had breakfast and lunch and just talking with a couple of the people on your crew and things like that. One thing that stuck out to me was, you know, being comfortable with being uncomfortable. And we had a chat with Jason and Riley, and we were talking about mental wellness and you know, keeping yourself physically well. And part of it, we talk about cold plunges and all these crazy things, but part of it is being comfortable with being uncomfortable. And that's you can kind of train yourself to do that. And it's a very important thing in trading because, you know, if you have a strategy, it's going to be tested. They're going to have times where it doesn't fit your market. You know, the environment's not good for your strategy, and you don't want to just run to the hills and re-optimize. And then all of a sudden it goes, you have the wind at your back and you've totally taken your edge away, or the market is presenting just a fantastic opportunity for you. And you're not, you know, you're not stepping on the gas and putting the trade out there. And so that was a huge takeaway for me. Also, as I said, I've been out of the market for a little bit. So I'm coming in with, you know, more cash than I probably should. And I'm like, all right, well, I'm going to be the sucker that buys the high of the market here getting in. Right. And so that's a concern, but really, you know, you have the relative rotation graphs and things like this. People are rotating out of any position. So I'm rotating out of cash into the best opportunities. That's okay. You know, people are rotating out of stocks that aren't performing well. And that's okay if they're rotating into something that's in the relative rotation graph, moving to a better place. So I shouldn't have the stigma of being concerned about it. You have good setups, you have good risk reward. We had like 20 or 30 actionable charts to look at. And so you say, okay, well, you know, this is a good spot to get in the market. We're not overbought. You know, everything is going well. We're early in the bull phase. So I feel better about it. And so it was really good to talk about that and say, yeah, you know, I'm in a good place. I can get in the market. You know, this is okay. The other thing that kind of surprised me a little bit was some of the questions about, you know, like position sizing. And that's a very important thing. And if you're not clear about your position sizing and how you position in the market, you really need to step back and look at that, because that's all, you know, risk reward and risk management, position sizing. These are all the basics. And if you don't know the basics really well and you're just blindly following someone who says, yeah, buy John Deere and do whatever, and you're not appropriately sized and it doesn't work out, then you're creating a lot of problems for yourself. So just make sure that you understand the basics. I know you have resources for that and you're available to talk about it, but just really make sure you understand the basics before you you know, get into the market.
Yeah, I'm glad that you brought up the position sizing. We have our first of our 12-week mastermind later today, and that's actually one of the first things we talk about. I love the fact that you just said that that's the first thing that you need to figure out before you can do anything else, because that's what we're covering on the first week, right? So like, I'm totally with you there. And when you talk about the position sizing and, you know, blindly following somebody into John Deere or whatever, or any stock or trade, you know, if your position sizing is too big and you're on the wrong side of the trade, you're obviously going to lose an irresponsible amount of money on one decision, right? So that in and of itself is foolish. But regardless of that, even put the losing money away, because you can actually make money potentially in that scenario. It's the mental energy.
Yes, 100%.
Right. It's the fact that this is such a large position. It's such an oversized position that you're so focused on what this thing is doing, you're going to miss the giant elephant walking past you.
100%. And you're there's a lot of mental capital involved, and stress, and you're going to be less tentative, and you're not going to have as much capital to put into a better situation. And you put a bigger size, it goes against you. You may violate some of your rules about getting out of it, because you're going to realize a larger loss. And then you're like, oh man, then I'm going to look at what I'm doing and re-optimize what I'm doing, and you're going to totally take your edge away. And so you just have to have, and I say this all the time, is trading is a business. And so you have to have a well-defined, you should be able to hand off your strategy to someone else and say, here's what I do. And they look at it and say, yeah, okay, I completely understand what you're doing. It has to be that detailed. And so I think this is all very important in the discussion that we had last week. So it's really,
I really like that, Matt. I hadn't quite thought of it like that. You want to be able to hand your strategy off to somebody else and have them. I really like that thought.
Yeah, it's a business. So, and there's things that happen in every business. Like all of a sudden you lose your internet and you have a huge open position on. What are you going to do? You need to know what your plan is, because if you get put in a bad situation, you're going to make the wrong decision because you haven't thought about it. You're going to react in the wrong way. You have a big gap down, and it's outside of you only had a 5% stop, and it's down 10%. What are you going to do? Well, I'm out. I'm wrong. I'm out. It's, get out of it. Great. Well, there could be a case where I'm going to get out of it. I'm going to sell a put so I can buy it lower. If I'm going to get back into the trade, but at a better price because volatility is higher, whatever you like to do. But you should be able to, have all of these contingencies. It's like a policy and procedures for your trading. Here's what I do, and you should be able to hand it off and someone can understand what you do.
Absolutely love that. Matt, can we back up a little bit? How did you, so you born and raised in Chicago, right?
No, I was born in Northwest Wisconsin, but I came to school here in '87. So
is that how you got to Chicago? Because you're like, when I think Chicago, I think like Matt Nygaard is like Mr. Chicago guy,
No, I came to University of Chicago in '87. So I've been here. I got here in October of '87, right before the crash. And so all the trust fund kids in my dorm had long faces shortly after I got to meet them. But
see what you did there, had long faces. Right?
Yeah,
I like that.
That's right.
So that's how you got to Chicago originally, back in '87, University of Chicago. Beautiful campus. You've taken me there.
It's incredible. Yeah, I came from a town of 2,000 people to a city of, region of 8 million, and I've been here ever since, basically. So.
And you never left. Any plans on leaving one day, or that's home forever?
Yeah, my wife and I spend a little time in Arizona in the winter. And
classic Chicago move.
Oh yeah, they have Portillo's down there now. They have all the Chicago restaurants are down in Tempe, so it's fine. And the foundation has a lot of activity there too, so it's good for me to be down there.
Of course.
But it's nice to get away, and we love that area. So we'll probably have dual, something in winter and something in summer.
Classic Chicago move. I mean, that's how they roll.
Yeah.
And then how did you get into trading? And I met you as an S&P futures trader, right?
Yeah.
Did it start there, or did that evolve into that?
Yeah. So I started off out of college working with a brokerage firm here in Chicago, and I was the youngest by a long way. And I was just dialing for dollars. I was just the clerk kind of thing. And one of the fellows there was a airline analyst, and he said, "Matt, you're young, you're good with numbers. You should be down on the trading floor." He said, "Well, I don't know anyone, right?" And so I said, "Well, I'll get you down there." So he's an airline analyst, so he knew all the guys in UAL and Delta and all the airline stocks, because they do their conference call. He'd call them down there and explain.
AOL trades like an airline stocks.
Yes, that's right. Isn't that the truth? And so I said, "Yeah, I'll set you up with my guy down in the Delta pit." And so I went down the next day. I was wearing my suit and tie, the whole thing like that, go down. So I'm in the pit, and one, introduces me to the guys in the pit. He said, "Yeah, this is Jack's guy, Matt. He's with Rothschild, whatever." And so he said, "Hey, Matt, how's Delta look here?" And I have no idea, right? They're asking me what I think about the stock. I have no clue. I know what the symbol is, but I know zero. I said, "Oh, I think it looks pretty good right here." And the guy picks up the phone and says, buy 10,000 Delta, hangs up, just like that. And I was like, wow, this place is incredible. And I just fell in love with it. And so I had my resume and I passed it out, and I was able to go work with Mercury Trading, with his John Deere's group at the time. And Pete was there, and he was just getting on a seat. And I was there for a little bit. And then once I got my MBA, I worked for a hedge fund in Florida and got into market making. And so I was an upstairs risk manager, and we had market makers on the floor in some of the bigger pits. And at that time, every option was single listed. So if you wanted to trade IBM, you had to go to Chicago to trade IBM options. If you wanted to trade Dell, you went to Philadelphia. If you want to trade Microsoft, you went to the P Coast. And so on the floor, if you had a big order, like JC said, I'm going to buy 1,000 IBM 165 calls, the broker would come into the pit, and you saw that order. You could see if the guy was running into the pit. You could see if the guy looked like, I want to get this order going. And so you had all these things as a market maker, intuitive things to be able to make your market. And so that was a big deal. And then eventually all the exchanges said, you know what, I want to trade IBM too. I want to trade Microsoft. I want to trade all these things. And so then it was listed everywhere. And then payment for order flow came in and said, okay, well, I want, Chicago says, I want to get all the Dell paper. I'm going to pay firms to bring the paper to us. And so that started. And
this is still like early 90s, mid 90s at this point?
Yeah, it's like mid 90s. Yeah. And so it's getting to there. I'll tell you kind of a funny story in the mid 90s. So you had the Asian contagion. So the market was just, wiping out big time. And we had positions in probably 200 stocks. We're all upstairs. Each of us had, 4 or 5 market makers we were responsible for. And they had 4 or 5 stocks they were making markets in. So maybe 20 stocks each. We were pretty sophisticated. We had, our guys on the floor had handhelds with theoreticals. They can make markets, put their order, put their trade in, come upstairs. We would hedge it manually upstairs. So if you bought an IBM call, you would sell stock against it. And so the order would, the trade would come upstairs. We'd yell over to the stock clerk and say, sell, 5,000 IBM at 74 or whatever. And so that we'd get hedged, get in our position, we'd manage it. So during the contagion, the market's just wiping out. And we were long a lot of gamma, which means that we're long options. So if the market moves, it's moving in our favor. Like we're getting shorter as the market's going down. So we'll buy stock against it. So we have 5 managers managing, say, 200 stocks, 150 stocks. They all are taking, getting really short, and we want to cover some of it. So you'll buy 50,000 IBM, pay 94, and then you'll hear back, yeah, you paid 89 on. It was moving so quickly, you would get filled dollars better than where you put the order in, and you would buy the wrong stock. You said, oh man, I meant to buy Intel, and it didn't matter. You had to buy that much of everything. And so I bring up that story, how much things have changed from then. And we were pretty sophisticated. And now it's a whole different deal.
So it's interesting that you say you guys were pretty sophisticated, even though it sounds like you were cavemen in the way that you did things. Yeah. So I think that speaks to just, what are you drinking there? What do you got there? What is that?
It's just agua fria, man, just straight water.
Yeah, it's a little early for the other stuff.
Yeah.
No, it's fascinating that you talk about how how sophisticated you were, despite how slow at this process were, picking up telephones and whatnot. I mean, this is wild. When did the transition to off the floor start to get going, and what kind of frustrations were you witnessing from those who had spent an entire career down in the pits and are now going upstairs and just lost their edge altogether? Can you speak to that?
Yeah,
and what year did that start to happen?
So when the ISE started and really brought a separate exchange with electronic trading, and then everyone else had electronic trading too. But I'll back up just quickly before then. So in the mid 90s, if you wanted to buy an option, if it was a marketable option, like if you were just going to buy the offer or sell the bid, it would be wired to the pit. Someone in the pit got filled without having to do anything. and, just show it up and say, yeah, I sold 10, 165 calls at $2. And so there was enough paper going on there that people were putting people on seats and putting them in certain stocks. Like AOL was a monster. It just traded all over the place and had paper flying everywhere, buys and sells, puts and calls. And so you would put someone in that pit and they didn't have to do anything, and they would just sell the offer and buy the bid all day and would make money without ever making a market. And so that kind of business. And then once it became fully electronic, someone would they would buy their call in Chicago and sell it in Philadelphia. You'd have no idea where the other side of the trade came off. And then, and I should say also, there are firms at that time were super sophisticated that, they'd get long a call in IBM and sell Microsoft put against it or whatever. They would hedge off the risk in a, kind of like a Jim Simon Renaissance Capital type thing. So they have closely related products, or they'll trade a dispersion trade where they'll have long gamma in equities and short index against it, and those kind of things. So there are firms that had super sophistication, and that's become more and more and more of the case. Sean had an email he sent out yesterday talking about payment for order flow and options, and talking about Robinhood and things like that, and it's a big business. Well, if you think about it, another part of that. So if you're a big hedge fund or a big trading group and you're buying order flow from Schwab or something like this, I want all your order flow, and some guy is going to buy a call for $2. That's almost like a stop for you. I mean, you can be $2 and a penny bid, and you get filled and sell it for $2.10. You only have a penny loss stop against that order if it's not a marketable order, if it's outside the the bid ask and things. So there's another part of that too. And as again, it becomes more and more sophisticated, it's more and more difficult for a guy who doesn't have the ability to trade every strike and every duration. Some of these contracts go out a couple of years. And if you're not willing to make markets in everything, the brokers aren't going to look at you. And you have less outs, you have less ways to offset your risk. And if you're only going to trade the first couple of contracts and a big order comes in, it could dwarf what you're willing to be able to, what you can offset. And all these other firms have abilities to lay it off a lot easier. So for a local person, the capital is very difficult, and managing risk is more difficult. You're going to have to take a lot more risk to make the same amount of money.
Can you explain the nomenclature there when you talk about locals? Can you speak to that a little
Yeah,
bit?
so it'd be a guy who trades with his own capital, or not affiliated with a large trading group. And so he's trading with his own money, and it'd be like Tom Baldwin type guy who would be in the big, the famous big traders down in the pit who were trading with their own capital and not affiliated with an outside group. And so that would be a local, someone who would be representing themselves and not part of a firm.
What year did that transition to away from the pits and going upstairs?
That's a good question, because I've always been upstairs, so it's been hard. I mean, there are some pits that still have some people in, but right now it's just like VIX and SPX Cash is really the only.
Yeah, it's like three guys looking at cat videos on YouTube. Right.
Well, getting back to when I first got down the trading floor going to Delta, a guy told me, said, listen, this place is dead. You shouldn't even consider coming down here. And he was sitting there reading a novel or something like that, his foot up on the Quotron. And it turned out to be one of the greatest times ever to, be a market maker. The market was incredible. There's paper flying everywhere, big raging bull market. So, you just have to take, there's times where it's not great, and there's time it'll come back. It's cyclical.
And then what about the frustrations? Can you talk to me about the edge that an individual may have had down in the pits, and now, you don't have to name names, but now they're upstairs and they're like, I don't know what to do now. Yeah,
well, I can even put myself in that category, really. You have as a market maker, your edge was that you were, you're buying for theoretical edge and you're selling for theoretical edge. And if you do that enough and you can manage the risk, you make a good living. You trade with a group and you do that. As the market gets super tight and people have sophistication to cut your market or trade closer to what your theoretical is and can lay it off somewhere else, where you can't, that your edge is disappearing. And so you have to, as I said, you have to take more risk to make the same amount of money. and that's where people get in trouble. And you have, you know, the Volmageddon and things like this. This was like a trade, is a loaded trade. Everyone's like, oh man, this is pretty cool. You can do this ETF versus this, or I don't know the exact trade, but you're taking a lot more risk and when it goes bad, it's going to take out a lot of people and it's going to be really ugly, and that's what happens. And so you have to kind of perk your ears up when you hear, loaded trade or everyone's in this and it's going great, whatever. He's like, okay, when is this not going to go well? And how is that going to affect what I do? Because you're going to wake up some morning and it's the market's down big or something happens, that currency unwind that happened in early August, you caught people the wrong way. And so you have to think about those things. What's the big trade? What's everyone in right now? And if that does unwind, what happens? So it's just in your back of your mind, not like you go into cash and wait for it to happen, but just in your mind.
I got 3 questions for you. Matt, we got a couple more minutes. Matt, thoughts on the market here? Dow's making all-time highs. Gold's making all-time highs. Gold stocks didn't get the memo. Crude oil stuck somewhere in the middle. Bonds are doing their thing. Like, when you think about the current market environment versus others in the past, what are your thoughts here?
I think some of the things you've pointed out about that we're kind of early, or we have the shortest and in the return also of bull markets. We're kind of in a period where the market normally doesn't do very well, but it's doing okay. And so when the market does better in times where it may not do well, that tells you something. I mean, these are things that you've been saying for years. And so for me, I'm looking for opportunities in the relative rotation graph, sectors that are moving in the right direction, find the best stocks in those sectors, have defined, risk reward. So it's the same thing you would do in any market. And so, as you say, new all-time highs are not found in bear markets. So we're everything's going well. We're not overbought. But you have to just, be disciplined and take the appropriate risk and make sure you have money on the sideline and know when you're wrong and get out. So
I hope you guys are listening to Matt. It's good advice, good sage advice. Matt Nygaard, best steak in Chicago.
Wow. I'm a Gene and Giorgetti's guy, like old school.
As opposed to the what's the other one? What's the other famous one?
There's a lot.
There's a lot, but there's another super famous one. What's it called?
Oh, there's one. I don't even go there.
No, maybe I'm wrong. Gene and Giorgetti's. All right. Best Italian.
I'm a Neapolitan pizza guy, so Spaccanapoli is in my neighborhood, and they import all their ingredients from Italy, and they're DOC certified and everything.
Italy, huh? I heard they have good Italian food there.
Yeah, they're okay. Yeah. So, so that's what I like. So
tell me the name one more time.
Spaccanapoli.
Spaccanapoli. All right. So when I personally think Chicago, I'm not thinking like Vietnamese. I'm not thinking about like Cuban food. Like I'm thinking about steaks. I'm thinking about Italian food. Like that's where my head is at. But I feel like I'm missing something. What's that third component of the triangle that Chicago? Is it something Polish? Like what are we thinking here?
Wow, that's interesting. I would go to like Chinatown.
Yeah, huh?
And I think about that because you're pretty eclectic and have a refined palate.
Do I?
Yeah, and go down there and see if you can find a good wine pairing for some dim sum or something like that. And you go down there and it's like you're stepping into another country. I mean, it's so the neighborhood's incredible, and there's a lot of authenticity with the cuisine. I'm not a huge fan, but that'd be something that for someone who's adventurous to get down there and try it out.
Interesting. So Chinatown, huh? That's good to know. Gibson's was the name that I had in mind.
Yeah, that's actually pretty good. I don't have a problem with Gibson's.
Yeah. All right. So nothing like Polish. You're going Chinese, huh?
I would also go up to Devon and go to. There's a lot of great Indian up there. Indian restaurants.
Really?
Yes.
Wow. Yeah. I got to tell you, those brats that we had at the at Wrigley with the sesame seed bun with the extra onions.
So good.
Man,
it's a steamed bun too. That's the big thing with the
Dude, they were so good. They were so good. I'm still thinking about them.
No ketchup.
No ketchup. Who does that?
You'd be surprised.
Matt. Before you go, I want to give you a chance. You sent over a chart. Can we bring that chart up here? Slide 14. Walk us through this and why you shared it with us.
Yeah. So this is a daily chart of a John Deere, and this was a name that JC brought up in the portfolio accelerator. It looks great. It's been in a base for a while, so I just dialed in a little bit. It's still a daily chart, and I agree with what JC was saying earlier about the squiggly lines for moving averages are just that. It's kind of a reference of how strong the current move is for me. So I use like a 9, 21, and a 50-day EMA, and I want those stacked. I want the shorter term momentum above the medium and long. On the bottom is RSI. I like RSI if I'm going to get long to be over 60. Just as a general, I want it to be relatively strong. So you can see in this chart in mid-August and end of August, it tested a level there, and then it peaked out above with RSI ticking up. The moving averages were looking good. It had a big upper wick. So I was, that's a concern, right? It's first testing a new high and fails pretty hard. And then it fell off the next day. And then you had a closing high a few days later. RSI ticked up over 60. So this was kind of a case where you had a lot of wind at your back. You had several things in your favor. It was macro, a good stock to be long in general. And then you can dial it in and say, okay, now we've broken out and it's confirmed with a new closing high. And then you had 4 straight days of higher high and higher low dailies. And so it just off it went. And so if you're patient and wait, you can find, this is just a very simple way to look at it. And I didn't do anything with this. I'm just brought this up as a way to look at the market for an idea that JC might present and say, all right, John Deere looks great. I want to find a place to get in. And so you can dial in a little bit, and this is a daily chart. You can go in tighter if you want to, get more refined. But I just brought this up as a way to show get as many things, get the wind at your back, have and improve your chances of success. So I just bring this chart up for that.
Cool.
Love it. This gets back to time horizons too, because Matt is bringing in a shorter term chart here. The chart that I brought up goes back forever. Right. And the point that I was trying to make is, you've got industrials making new all-time highs, S&P 500 making new all-time highs, and you have a bellwether like Deere that hasn't even broken out yet. Right. Which someone like myself, what does that mean? Right. That means that there's plenty of fuel left to burn, right?
100%.
Matt Nygaard, my friend, we had such a great time in Chicago. It was freaking awesome. I appreciate the invite. I appreciate you joining us, sharing some some wisdom both in Chicago and here today. So as always, you're the man. Appreciate it.
Thanks so much. And thanks for being a platform for the foundation. Really appreciate it. It means a lot to me. So
happy to do it. You guys are doing great stuff. So we're going to send out the link. Make sure everybody watches that video.
Awesome.
Thanks,
yep. Thanks guys.
Cool. Adios.
I told Matt in Chicago that my flight landed just a little bit too late. So I missed the Pat Tillman thing, but I'm willing to bet that I'm the only person there, or that would have been there, that actually owns a Pat Tillman jersey, and I didn't get a chance to go, so I was a bit bummed about that.
Did you bring it? Were you going to wear it?
I didn't bring it. It didn't even occur to me to bring it, honestly, because I'm not going to walk. I don't want to walk around the airport in a Pat Tillman. Whatever. I didn't bring it.
How about the fact that I wore an Andre Dawson jersey?
He was at the game. And he was at the game.
I only have an Andre Dawson Cubs jersey because he's from Miami. We played on the same field at Southwest High School a zillion times. I didn't go to Southwest High School, but for whatever reason, I had a zillion games there, summer leagues, all kinds of stuff. Yeah. I think it's called the Andre Dawson Field, if I'm not mistaken at this point. And he would always go to the same batting cages as me in Tropical Park, and I would always be hitting next to him in Tropical Park. And so big fan of the Hawk from Chicago. Bring my Andre Dawson jersey. I'm rocking it. Everybody's having a good time. And who's there in the 7th inning stretch singing "Take Me Out to the Ball Game"? A one Andre the Hawk Dawson. What are the chances?
Not good.
if you're convinced this is not a simulation, you should have seen us with Andre Dawson singing "Take Me Out to the Ball Game," right? What are the chances?
Speaking of not good, his voice was not good. But anyway,
It's a baseball player. It's not supposed to be good.
I know. All right, 9:37 here. You want to do hot corner because we had a little something. All right.
Yep.
So hot right now.
All right. So the hot corner this morning, what do we have? You want to zoom in there, Spencer?
Yeah, this Southwest Airlines one is the interesting one.
Southwest Airlines is definitely the more interesting one. PBF Energy, these guys continue to buy another Form 4, another, what is that? $16 million. PBF Energy. This is a refining company, Control Empresarial del Capitales. This fund keeps buying. They've been buying. Another monster move. But what stands out to me, because as much as that stands out, it's been happening, so it's not really anything new. They just keep adding to this position, which in and of itself is very impressive. Southwest Airlines, 13D. Elliott Investment Management stepping up their game. Now officially an insider. They went from 9.7 to double digits, so now they're going to be filing Form 4s with any other purchases that they're making. This is Southwest Airlines, and the reason that stands out to me, and if you want to throw up slide 5, and then we'll get back to the Southwest Airlines specifically. It's this dash for trash that we're seeing. The worst companies on the planet.
That IPO index, let's go.
The IPO index, which is loaded up with classic household bellwethers and blue chip names like Robinhood and Rivian, classic blue chip stocks, leading the way from that volatility spike at the beginning of August. China up almost 20%. ARC, are you kidding me? These are the worst companies on the planet. No portfolio manager in human history has lost investors more money than the portfolio managers at ARC. And yet, despite all of that, they are the biggest winners from that volatility spike in the beginning of August. Airlines up almost 20%. IPO index, China, ARC, airlines, all doubling the returns of the major averages during that period in the middle of a bull market. That rotation into some of the worst companies on the planet, some of the most detrimental portfolio managers in human history, those are the types of stocks that they're buying in this environment. And some people are like, well, JC, that's because it's late in the cycle and that happens at the end. Bro, they haven't even gotten going yet. This is like 6 weeks.
20% ain't shit. 20% ain't shit.
It ain't shit. You know how much money these ARC people have lost investors? They have a long way to go. A long way to go.
All right. So let's talk about the other one here, Southwest Airlines. They got some stuff going on here. So Elliott, who we've talked about on the show previously, they always seem to get their way. These guys, they are activists, and they put out a letter yesterday to Southwest shareholders saying, you guys better get ready for a special meeting because we got some ideas. Southwest today announced that they are reducing their service and staffing in Atlanta to cut costs, and there's probably more coming here.
I mean, can you imagine a world, Spencer Israel? Imagine a world where airline stocks are not falling.
I mean, I'd probably prefer it, right? I mean, we need airlines. It's a literal necessity of our society, right? So we need these businesses. So yeah, I kind of would like it if they didn't all go down like this. I'd prefer if they were good investments, but they're not.
Think about the typical investor. Do you think the typical investor can imagine a world? And I know what you're saying is that you would prefer it, something that you want to happen. Sure,
I would love to own the airlines.
Do you think the typical investor can even imagine a world where airline stocks are not going down? I don't think they can. It's so far-fetched from reality. Like airline stocks going up?
No, come on now. They went
Think
up.
about it. Even oil's gotten cut in half. These airline stocks still can't do well. We're in a bull market. You know, everybody's traveling everywhere. These companies still can't make money. They got, you know, they got their union issues. Like these
Come on
union
now,
people
come on.
are getting crushed.
These airline stocks went up for a long time in the prior decade. They did.
They completely didn't get the memo about this bull market until now. That's my point, right? That's my point. The point is like sentiment is so bad. You know, these companies are just so bad. Like everything just sucks. It's like so bad it's good. And they're buying. And I don't think it's just the airline things, just like I don't think it's just a China thing, right? Just like I don't think it's just an ARK thing. Like all of a sudden now, you know, ARK is a good investment strategy, right? Like I don't think it's any of those things. I think it's really just rotation into the things that are not working. And in bull markets, what ends up happening, go back and look for yourself. I've taken the time to do so. I encourage you to do the same. Go back and you will notice that in bull markets, the laggards catch up to the leaders.
So we should be, you're giving me mixed signals now. We should be interested in this?
We should be interested in rotation into airlines?
Is that what you're saying? I'm asking.
I think so, particularly because nobody is. I think so. You don't think that the rotation into airlines, ARK, the IPO index, China, all at the same time, you think that that's a coincidence?
Airlines haven't really gotten going.
Airlines are up 20% in 6 weeks.
All
They're
right.
up more than China.
All right.
What do you mean? But to your earlier point, it's just 20%. Right? That's nothing compared to the amount of damage they've done for investors. Just like ARK, you know, 20%. As great as that is, it's nothing compared to how much money they've lost investors. So there's a long way to go. So again, just to reiterate, in bull markets, the laggards catch up to the leaders. In bear markets, what ends up happening is that those last remaining leaders catch down to the laggards. That's what happens. That's the rotation that you see in different types of environments. So what we're seeing here in China, airlines, ARK, the worst companies on the planet, all at the same time, is that rotation. That's what that means to me.
I mean, Spirit Airlines is a $2 stock. Not a single airline has recovered from COVID, at least like from a stock perspective, right? Not a single one. Some are closer than others. Delta is, you know, at least within shouting distance of their you know, pre-COVID highs.
Yeah, Delta is the least horrible of the big ones, and of course you got SkyWest, which is like,
yeah, what's that about?
well,
okay,
I don't think investors know that it's an airline.
I don't know what that's about.
I don't know what they're doing, but they're doing something right over at SkyWest. I think it's just like a private small, right?
Could be. In which case, that's a whole different business entirely.
Yeah. Well, the charts are clearly showing you that whatever they're doing is the opposite of what all the other airlines are doing.
Right. Anyway, I was looking at the Southwest thing. I have a news feed up on my screen, and what whiplash from the Southwest Newswire yesterday, because at 10 a.m. they announced they have a press release. Southwest Airlines celebrates the 30th anniversary of the iconic television show Friends by offering up to 30% off base fares. That's exciting. But then a couple hours later, Southwest Airlines responds to LA management with shareholder letter and provides update on engagement. So here's a nice fluffy PR. Here's a serious thing we have to deal with right now.
What does this airline have anything to do with the show Friends?
Nothing. I just thought that was funny that they had a nice fluffy PR in the morning, and then in the evening they had a serious thing about shareholder activism and and cutting costs. It's just like serious whiplash, and all in one day. So such is life if you're an airline, I suppose.
Is Mary coming in today? I want to hear from Mary.
We got Sean here. Mary's tomorrow.
Oh, Sean did request to be like, we don't want Mary, we want me, is what he said, I think.
Sean today, Mary tomorrow. Let's bring Sean on.
All right. Ooh, Shawnee baby.
For the record, Mary is always the better choice. I did not say you should have me instead of Mary.
I saw a request.
I did say request because I will not be here tomorrow, gentlemen. I will be lost in Yosemite National Park at this time tomorrow.
My goodness.
Yosemite. Yosemite not.
Yeah. Hey,
so the artist formerly known as Chicago Sean, ladies and gentlemen.
Yeah, I'm glad I tuned in on the Chicago Booster Day. Great seeing Matt Nygaard on there. Love hearing all the Chicago stories. And, I was thinking about Chicago this morning as I was looking through my notes from the Portfolio Accelerator event that we had. And, we were all kicking around ideas. There were some great trade ideas that we liked, some that we actually put on while we were there, some that we just, kind of filed away for later. And I'm looking at my notes here. I got this little sheet of paper here with notes that I took. And I can't believe there were two other trades that I did not take, but I was like really wanting to do it. I'm like, I'll just check back on these later. And I've already missed it. These things have already taken off since we talked about them. C Limited and Southern Copper. Do you remember we were talking about those two trades for two very different reasons? Yeah. Both of them have ripped in the last 4 days. Such is life.
Is that what happens in bull markets, Sean?
This is bull market behavior for sure.
Yeah, when you like an idea, you want to put it on, you wait, and then it's gone, and you lost the opportunity. Those are the types of things that happen in bull markets, right?
These are the types of things. You can't trade them all. You want to trade them all. You just can't. Either you don't have enough capital, or they're just moving too quick. In this case, like I missed them, man. I mean, I could buy them now, but I'm 4 points behind. I would rather, now I got to wait, which frustrates me. But
what was your favorite part about the Chicago?
My favorite part is the fact that Steve Strazza, Patrick Dunawilla, both of those guys had never been to Chicago before. Both of them were kind of wishy-washy about going to Chicago.
Yeah.
And now both of them are the biggest fans of Chicago. Yeah. And me as a guy who called Chicago home for 10 years, I was like, yeah, of course you love this city, because once you spend time in that city, especially when the weather's great, like it was when we were there, I mean, it is one of the best cities in the world. And I always say that in the U.S., Chicago is the U.S.'s best summer city. There's so much going on in the summertime. People forget that Chicago is on the lake. There's 27 miles of beachfront in the city of Chicago. People forget that. And in the summertime, it's front and center, right? Everyone comes to the city for the summertime because all the summertime activities, there's live music every day, everywhere. There's block parties, there's street festivals. Between the Cubs and the Sox, you got a home baseball game every single day, all summer long. It's the best city in the summertime. I love it, and I'm glad you guys all got to experience it and know why I liked it so much when I was there.
As much time as I've spent in Chicago, I've been there a zillion times. Huge fan of Chicago, always have been. You know that. And I was telling Strazza how great it is, and he was like, "Yeah, it's not. We'll see." I'm a big fan of Chicago. I hadn't. Whenever I go to Wrigley, I just go to Wrigley and then I leave. Go to Wrigley and then I leave. And this time I kind of took, the opportunity. I walked through it a whole bunch, and like I was checking it out. It reminds me a lot of Hoboken. That sort of scene.
That's not a comparison I've ever heard. I'm not sure Spencer will agree with that.
And I'll tell you why. You got a lot of young people.
Hoboken. Wow.
You got a lot of young people going back into downtown and stuff like that, right? But are living in Wrigleyville. You got a lot of bars and restaurants and just young, good-looking people and bodegas on the corner and stuff like that. Just very convenient area for locals who don't want to be like right downtown and everything like that. I don't know. You think that's all far off? Anybody want to weigh in here? That's what it felt like to me, in a very good way, by the way.
Well, you more or less just described the entire north side of Chicago, right? Like Old Town, Lakeview, Lincoln Park, Boys Town. Like that's basically all of the north side of Chicago. Wrigleyville is a little bit more specific in the fact that, that's party town, right? That's where people go to party.
Well, Hoboken is that.
Yeah. But whether it's the Cubs or, any major sporting event, like Chicago's a great sports town, no matter what team you're a fan of. You could be a fan of, anybody, a college team, pro team. They've got a sports bar for you in Chicago, and many of them are in Wrigleyville. So whenever there's a major sporting event, it's a great place to be. In fact, I remember the first time in many, many years when the Chicago Blackhawks won the Stanley Cup in 2010. I watched the game at a bar just outside Wrigley Field. And when they won, like the entire Clark Street where all those bars are, the police shut the street down and there were thousands and thousands of people in the street just going crazy. It wasn't a Cubs game, right? But it's just, that's where people go to party, especially with sports. It's a great place.
You're reiterating my point. Wrigleyville, Hoboken, a lot of similarities. That's all I'm saying, in the best ways. All right, cool. So what about from a trading standpoint before we get to recess? Any thoughts on this market? I know we have our meeting in an hour.
Well, look, we talked about it last week, and nothing has changed from my point of view. This is a bull market. We need to be acting accordingly. We need to be getting more aggressive. We need to be positioning in high beta names. I think that's where we're going to be rewarded over the next 3 to 6 months. So we need to be, finding the leaders. I know Strazza's looking at names that, are coming off what looked like they could have been tops and now are reversing. Those aren't my favorite setups, but I'll take them when the setup is right. You guys, I love to buy stocks making all-time highs. That's my favorite trade. And there's plenty of those out there, but there's opportunity everywhere if you're willing to look for it. And so we need to be aggressive, and that's my MO, at least right now. That could change next week when I get back from Yosemite, right? Something could change in the market, but right now, I feel like we need to be aggressive.
Absolutely love it. Love it.
All right.
Hope you guys are listening.
Do some recess, I guess.
Do it.
I feel like we kind of did a lot of recess there.
I think we just did a lot of recess. That's right. I just want everybody to know. I know we got some comments in the chat. Be like, JC's always talking about these oxtails. Can I get the recipe? I'm gonna go ahead and share that recipe. It's coming up. Just stay tuned. But they are currently marinating in an irresponsible amount of cayenne pepper. Because in the old days, I would make my oxtail and the broth would be so spicy it was unedible. And then the meat wasn't spicy at all, which is not what I was trying to do. So I flipped that, and now I'm marinating the meat first, and the meat turns out to be very spicy, and the broth is not. So mission accomplished. That's the trick.
Still, I've never had oxtail in my life, so.
Hey, since we're talking food, I had a really cool dad moment last night that I think JC will certainly appreciate. His kids aren't old enough yet, but my son is 10, and I'm proud of my son last night. He was telling a story at dinner to me and my wife about how there was about 3 weeks ago, me and him went on his first Boy Scouts camping overnight, right? We did an overnight camp up in the mountains. And, we brought all this food and, we did some cooking and it was great. But the story my son told was that one food failure, and this was on me, is the kids wanted, in addition to some other things, the kids wanted ramen noodles, right? So I went to the grocery store, I picked up ramen noodles, but where I failed was I didn't know that I had to buy a separate seasoning pack for the ramen noodles. Yeah. So the ramen noodles came with no seasoning. And well, you know what the kids did and they improvised? They took salt and pepper and kind of kept tinkering with it and getting the flavors right. And my son declared to my wife that, you know what? We didn't have what we needed. We went with the flow. We used some salt and pepper and it was delicious. And for me as a dad, I was just very proud of my son. The things weren't perfect, but he figured out a way to make it work. And, when you're camping, you kind of got to go with the flow. And so for my son, he thought that was a great dining experience, which of course the three of us would be like, ugh, ramen noodles with salt and pepper. Come on, terrible. But my son made the best of it. I was pretty proud of him.
Made it work.
When I was in college, my next door neighbor, my freshman year dorm, he taught me how to do ramen noodles, and he had all these seasonings and spices. So I learned that real quick. Yeah.
Yeah, I mean, I can't remember the last time I bought ramen noodles, so clearly I'm out of the game.
Not in the Perlman program.
But Sean, they should come with the pack. That's what I'm.
That's what I thought. That's how it was when I used to buy them when I was in college.
They still do. So I don't know what you bought. So,
we got some weird brand that you had to get them separate.
Whatever. My recess is more of just a question. I have an opportunity to join men's basketball league in my gym, and I'm not sure if I should do it. And here's why. There's two age groups, right? There was the 18 to 34 year olds, and there's 35 and up. So I'm 32 or 33. Sorry, I don't know how old I am. I'm 33. So I'm in the younger group. I don't want to play with the younger group though. They're gonna kill me. These 18-year-old kids are gonna destroy me. I want to play with the old guys. So I don't know if I want to do it or not. I want to play basketball, but I don't want to get dunked on by 21-year-olds who are in better shape than I am. You know what I mean?
Yeah, I see an Achilles tear in your future. Not to be Debbie Downer over here, Spencer, because I love you, but
I like basketball, and I'm not totally horrible at it, right?
Here's what I think you should do, Spencer. I think you should suck it up and play with the kids, right?
Yeah.
Here's why. Because they're going to kick your ass.
I'm gonna die.
But you're going to get in shape. You're going to get pretty good. And then when you graduate to the seniors league, you're going to be like the young stud. You're going to be crushing it. You'll be the one dunking on everybody else.
All right. I have 5 more days to join. The deadline's in 5 days, so I have 5 days to ruminate on this. But I hear what you're saying, Sean. I hear what you're saying.
I don't want to tell you what to do, Spencer, but
I'm just afraid of getting like dunked on and
you're gonna get
ping
dunked
pong
on.
is more your speed.
You're gonna get dunked on. It's your ankles that I'm worried about.
It's gonna be embarrassing. All right. Anyway, all right. Let's wrap it up here. We have our meeting in an hour. I hope Steve will be able to do his weekly hot corner video today, assuming he can get his internet back. And hey, as a reminder for all you folks that are in ASC Premium, the very first mastermind is today at 4:00. An email should have gone out. If not, it's going out soon with the details on how to watch that. If you are not in ASC Premium or not or do not get mastermind, you can do so by clicking on this or scanning this link on the screen above my face, QR code there. And you can get access to the first course starting today at 4:00. So everyone in premium, we'll see you there. And
if it's as good as JC's excitement, it's going to be pretty awesome. JC's pretty excited about this.
We've never done anything like this before. So the fact that we could do like a really intense 12-week mastermind focusing on a different topic every single week. And then we're very fortunate to have some really smart friends that can chime in on a weekly basis on that particular topic.
Yep.
In many of these cases, these are the experts in that topic, which I am not in many of these cases. So having them weigh in on that, I think could be really beneficial.
You're going to be dropping some knowledge bombs. I'm looking forward to it.
I think so.
We'll see you guys there. Have a great rest of your day. Go make some money. All right.
Adios.
I can't take no loss. I don't even know what it costs.